Good morning, everyone. Broadcasting live from Yeouido, Seoul's financial hub. Today is June 15th, 2026. Welcome to our South Korea market briefing. Our focus today is navigating a very specific and highly unusual landscape, navigating strong macro tailwinds clashing with extreme local volatility. Let's dive right into the data. Turning to the executive summary on slide 2. The South Korean equity market is currently exhibiting a profound divergence. On one hand, we have a highly favorable easing of global macro risks. On the other hand, this global relief is colliding directly with an intense debt-fueled retail FOMO, fear of missing out, locally. It is a market being aggressively pulled in opposite directions by smart institutional money and over-leveraged retail players. Slide 3 details the dynamic market drivers shaping today's session. First, macro relief. The U.S.-Iran peace agreement has successfully secured the Strait of Hormuz, stabilizing oil prices. This acts as a major catalyst for foreign passive inflows into Korean large caps. Second, tech momentum. SpaceX's successful IPO, which surged 19.2%, is sustaining a massive rally across the AI and aerospace supply chains, aggressively absorbing institutional liquidity. Finally, the critical local friction. The Bank of Korea has stepped in. They have signaled imminent rate hikes and initiated credit line contractions, which become strictly effective tomorrow, June 16. This is designed to curb severe retail leverage, creating a major structural headwind for the domestic market. Slide 4 visualizes this disconnect perfectly: the volatility divergence. While global macro risks have substantially subsided, evidenced by the U.S. VIX dropping 9.05% to a very calm 17.68, local volatility has exploded to abnormal levels. The KSVKOSPI is currently surging near 90. To give you context on this Korean market idiosyncrasy, any reading over 20 is typically considered a severe risk zone. A reading of 89.91 indicates a severe discounting of local fundamentals, driven almost entirely by retail speculation and leverage risks rather than actual corporate earnings. Let's unpack this retail speculation on slide 5. We are currently in phase 2, retail FOMO, witnessing what behavioral finance defines as the noise trader phenomenon. The domestic market is dominated by extreme retail herding, or information cascades. To quantify this, over the past 9 trading sessions alone, the KOSPI and KOSDAQ have triggered 9 sidecars, fueled entirely by a frenzy in leveraged ETFs. In stark contrast, smart money, meaning global hedge funds and institutions, is actively capping leverage exposure to large caps. This creates a critical vulnerability point as local retail investors face imminent margin calls from the Bank of Korea's credit squeeze. Moving to slide 6, we outline our Bayesian 24H KOSPI scenarios. Our base case probability remains the highest, expecting the index to trade near flat as foreign accumulation in tech battles the localized retail credit squeeze. We also maintain a bull case if the SpaceX momentum entirely overrides local friction, and a bear case tail risk if the KSVKOSPI's extreme reading of 90 triggers a massive capitulation and forced liquidation in leveraged ETFs. So, how do we position ourselves? Slide 7 covers our sector rotation strategy. For our overweight allocation, we focus on core and defensive plays. First, financials. They are the primary beneficiaries of the Bank of Korea's hawkish stance and rising loan margins resulting from the credit contraction. Second, large-cap semiconductors. They are maintaining structural earnings growth, with operating profits projected to jump a staggering 571% by 2026. Their fundamentals remain intact despite the retail noise. Conversely, we must be underweight on overheated sectors. This specifically means leveraged index ETFs, which face extreme vulnerability to sudden volatility spikes and liquidity drains from retail credit limits, as well as thematic small caps in space and AI that lack immediate fundamental backing and will suffer first during a risk-off rotation. Slide 8 outlines our actionable trading plan for institutional execution. Rule number 1, elevate cash reserves. Maintain a minimum of a 40% cash weight. A KSVKOSPI reading above 20 is dangerous. At nearly 90, it dictates extreme capital preservation. Rule number 2, wait for support confirmation. Delay entries into target sectors like financials until major technical support levels are proven against retail selling pressure. Rule number 3, execute short hedges. Consider tactical short hedges against retail-heavy leverage vehicles to exploit the extreme divergence between global calm and local panic. This concludes our data-driven insights for global investors on navigating Korea's highly unique market conditions today. The data points toward institutional caution, highly selective accumulation, and strict volatility management. I will now open the floor for any questions regarding your specific allocations.